Hello Dairy Today viewers, from the Stuart Peterson Advisory Team. This is your Dairy Week in Review, recapping the week of March 23rd, 2012. Closing the trading book on another week here on Friday. Once again, the key theme this week was extreme volatility, so we saw very sharp gains and very sharp losses really take place in a very short amount of time. When we look back at where some of these components have been over this past month of March, it definitely seems like the entire dairy complex has caught a bit of March madness, to say the least. And a good example of that, if we looked at the same table 24 hours ago, the blocks and barrels were at 163 as buyers continued to bid it up throughout the entire week, and those sellers really remained in the weeds throughout the week and watched those prices go higher. But we definitely did a 180 turn here on Friday. Those sellers returned to the marketplace, really came off the sidelines and offered things lower. So we'll go ahead and take a look at that price action for the week and how it affected the entire components across the board. As you can see, cheese, looking at the blocks, we were down 8 3/4 cents, finishing below that 150 mark. Barrels even hit harder than that, down 12 1/4 cents, finishing at 146. Butter did remain unscathed for the week, finished a bit higher above that 152 mark, and the powders did finish a bit lower there too. April whey down 1 3/4 cents. April non-fat dry milk finishing unchanged for the week. Now taking a look at the class 3 milk prices for the week. As you can see, some pretty widespread pressure, especially in that April through August strip, where prices were sharply lower due to that lower cheese trade to finish the week. And once again, before today's trade, each of these months were really poised to have some great gains, but that lower cheese trade really pressured each of those contract months and sent them packing for that negative territory to finish the week. But as you can see, the front month contract did edge a little bit higher, up 2 pennies, and the May contract only down 14 cents, so really had the least amount of damage in that second month contract and still holding a premium to May and June. So overall, really a little more optimism for the month of April and less optimism as we move out into the May-June months. As you can see, down 35 for May, finishing right at 15.15. And then for June through August, you can see very sharp losses in those months, down anywhere from 48 to 30. Flipping over the charts, we'll look at the weekly block barrel average to really paint us a picture of just how significant today's sell-off was. As you can see, we were working on a third straight higher week for cheese, peaked out at that 163 level. So overall reached above the 160 resistance level that we ran into in late December, early January of this week. So very significant gains after we carved out this level of support. And as you can see, we washed all those away in just today's trade. And where we bottomed out here in that 146 level was just 1/4 cent of where we bottomed out 3 weeks ago. So overall supportive that we didn't come crashing through that. But overall, once again, very significant, down 10.5 cents for the week. So we'll keep an eye on that bottom end support as we move into next week. Earlier this week, USDA released the latest milk production report for the month of February, so we'll go ahead and dive into those numbers and see what they say there. First looking at milk production, then the total herd size, how it's grown, and then looking at milk per cow as well. We'll compare it to the previous month, or the month of January, and the previous year as well, so the more important number as we look at that year-over-year change. So first starting with total milk production, compared to the previous month, edged a little bit lower there, down 4.1%. Overall, a seasonal shift lower. Compared to the previous year, the more important number, up 4.3%. We take out that extra day from the leap year, and very significant growth there. We'll take a look at that on the charts in just a minute. Then looking at the herd size, also grew as well, up 9,000 head compared to the previous month. And compared to last year, big number as well, up 87,000 head. So that herd size continues to grow throughout the year. Looking at milk per cow, was down a little bit compared to the previous month, down 76 pounds. But compared to the previous year, up 115 pounds. So very significant growth there that really contributed to the 4.3% growth year over year. Taking another look at that February milk production report, which came out Monday afternoon, we'll flip over the charts to do a little comparison of how these numbers stack up compared to last year and where we're looking to go for the months ahead of us. So as you can see, looking at both the January and February reports, we've been well above last year's numbers. More specifically for February, I've been up 4.3%, so very strong growth as you can see on the chart, and still overall pinning the support or the recent growth with overall the mild weather conditions around the country really have proved to be advantageous for total milk production, and also seeing the total herd grow over the past few months. So looking ahead, really expect the same thing to play out when we look at where February really is the lower producing milk month of the year on the charts. As you can see, the lowest month. So when we look to February, overall its trajectory could be very significant as we snap back into March. So looking really to come off the charts there for March. So very interested to see where that report comes in at. This week, USDA also released the February cold storage report. So we'll go ahead and dive in those numbers and really check how these stocks have changed compared to last month and also last year as well. So first starting with total cheese stocks, did come above that 980 million pound mark. So compared to last month, just up a touch, up 1%, but more importantly compared to last year, down 5%. We'll look at that on the charts in just a minute. And then looking at American cheese, which is the biggest category of cheese, came in above 606 million pounds there for the stocks number, down just a touch compared to the previous month, down less than 1%. Compared to the previous year, down also there, down 2.4% more importantly. And finally looking at butter stocks, different story here. Once again, came in at 20 million pounds above that, as you can see, compared to last month. Strong growth there, up 21%. Compared to last year, same story there, even stronger, up 48%. Taking a closer look at those total cheese stocks on the charts, we'll look back at last year and how it stacks up to this year. So as you can see, looking at January and February, we were up month to month. That is a bit counter-seasonal. As you can see, last January to February we're down, but from there you can see stocks start to build through the first half of the year and then start to draw down during that highest demand period of the year, those third and fourth quarter months with the holidays around the corner. So you can see here a bit counter-seasonal, but overall very supportive, that we were down about 5% compared to last year. So overall the more important number is that 5%. So looking into next week, once again the key theme is going to be volatility. It really has been the only constant, the only certainty over the past few weeks, and definitely don't expect that to change as we close out the month of March. Also looking at key reports ahead of us, the January commercial disappearance is on Tuesday, March 27th, and also looking at to close the week on the other side of the coin, very important grain stocks and prospective plannings report on Friday, March 30th. As always, thanks for watching, and we'll see you next time.